Welcome back. So the cues are cautiously optimistic across Asia. We can say that because Wall Street decided to have a bit of a tepid, close. The implied open is saying that we'll probably start slightly lower, 55 points. Lower, lots and lots of stocks to go over and plenty of earnings to track. So let's straight away get to our team, which is standing by with the CNBC-TV18 list of top stocks to watch. Guys, well, so many numbers to go with. Let's start with the biggest one of them all, RIMA, Reliance Industries. So how do all the parts add up?
Well, it's a beat compared to street expectations, and the beat was led by the retail business and the oil to chemicals business. So first, in case you missed the numbers because they came out late yesterday, here are the numbers. The company's reported a revenue growth of 6.6% on a year-on-year basis. Margins inched up 20 basis points to 18.3%, and the profit jumped by 7.4%. These are the year-on-year numbers. If you look at it on a quarter-on-quarter basis, which is what a lot of analysts track, the EBITDA growth, the absolute EBITDA growth was about 12%. And this is higher than the 8% that the street was anticipating. Here lies the beat. And as we said, the beat came in from two key segments. One, the oil to chemicals business on the back of a pickup in the refining margins. So oil to chemicals estimate was for a 10% jump in EBITDA. The actual number was a 16% growth. Even retail, where Mangalam was anticipating a 7 to 8% increase in the EBITDA, the actual number came in at 16.7%. For Reliance Jio, it turned out to be a stable quarter, and even for the oil and gas, basically the upstream business. Brokerages are bullish. CLSA has an outperform call. Morgan Stanley says Q3 results had elements for the stock to re-rate as results downgrades unwinds. Jefferies says further traction in retail, a tariff hike and a possible listing of Jio could be triggers in FY26. Reliance Industries spiked in the last 30 minutes of trade. It ended with a gain of more than 1%. So far this year, it's outperformed the benchmark by 6% in this calendar year so far, but it's still down 21% from its 52-week high. Back to you.
Okay, all right, Rima. Thanks a lot for that. So we'll keep an eye on that one. Axis Bank, the numbers looked a little bit soft, but Abhishek joins us to help us out with a quick take on that one. Abhishek?
Well, Axis Bank reported one of the weakest business momentum that you are seeing in last 15 quarters on a YOY basis. So take a look at the deposits. Deposits have grown by 9% YOY. Advances growth much below the deposit growth at 8.8% on a YOY basis. So the CD ratio remains elevated, which means that they need to outpace the deposit growth versus the advances growth in the coming quarters to lower the CD ratio. The CASA ratio is at 38 quarter or more low. First time I'm seeing in last 10 years that the CASA ratio has fallen below the 40% level. The net interest margin as a resultant of higher incremental deposit cost as well as higher slippages has come in at 10 quarter low of 3.93% versus 3.99% in the previous quarter. The slippages, they are higher than analyst estimate on account of unsecured portfolio like MFI and credit card and personal loans, etc. It has come in at 5,432 crores, which is one of the highest that you are seeing in last 13 quarters. Operating efficiency is one of the best in last 7 quarters. Cost to income ratio is at 46.2% versus 47% in the previous quarter, and that's thanks to OPEX, which has declined by 4.7% on a sequential basis. With reference to the PNL versus RPOL, the NI is below RPOL, but lower OPEX has meant that the profit is slightly ahead of RPOL. Back to you.
All right, Abhishek, thank you very much for that. So big day for earnings. Next one, Infosys in focus. Rima is here. Rima, take it away.
Well, Infosys Q3 numbers were actually pretty okay. They were in line with street expectations, but the ADR was down 5.8%. So first on the numbers, revenues were ahead of street expectations. The company reported a constant currency revenue growth of 1.7%. The estimates were for a 1% increase. Q3 margins expanded by 20 basis points. The company, on expected lines, revised the revenue forecast for the year. They're now expecting a 4.5% to 5% growth. Again, in line with what the market was anticipating. Margin guidance unchanged at 20 to 22%. One of the key takeaways from the management commentary was, in Q2, the pickup in discretionary demand was limited to US BFS, banking and financial services. In Q3, in the last 3 quarters, they saw a pickup in discretionary spends, not just in US BFS, which continued, but also in Europe in the financial sector. And the other one is US consumer and retail sector. So these were the other 2 pockets where there was an improvement in demand. Now, now about the ADR, which has slipped close to about 5.5%, 6% overnight. Numbers were fine. There were no, most brokerages are upbeat. They call it their top pick in the IT pack. The stock has outperformed. So positioning versus the rest of the pack, in the last 1 year, Infosys up close to about 18%. And also, maybe there could be some disappointment because the company, the guidance which is there at 4.5% to 5% implies in Q4, the company's revenues will fall by either 0.5% going up to 2%. So Q4 is going to be a soft quarter for the company, going by the implied Q4 numbers. But all in all, perhaps it's just positioning some profit booking after the outperformance versus peers.
Okay, all right, got it. So that's LTIMindtree. We're going to keep that on the radar, of course, as well. That was, we have to, Infosys, and after that, we have to look at, of course, LTIMindtree as well. So run us through this one, Rima. How is it stacking up?
Well, it's a modest beat compared to expectations, but again, not a big beat. Revenue growth at 1.8%, EBIT margins at 13.8%. The deal wins have come in at record high levels, up 29% quarter on quarter and 12% on a year-on-year basis. The key positive is the banking and financial services, which is 36% of the company's revenues, is showing sure and certain signs of a recovery. Quarter on quarter revenue growth was 3.4% in BFS, and even on a year-on-year basis, revenue growth in the banking and financial services vertical, where the company is heavily indexed, is up nearly 7.5%. Now, this one's an underperformer versus peers. And these numbers, there are no negative surprises. It's a decent set.
Rima, thank you very much for that. So it's a busy morning for Rima all across. Metro Brands, Hatsun Agro are the other stocks that we're going to focus on next. Mangalam is here to tell us why. Mangalam, morning.
Good morning. So we're looking at Metro Brands results that have come by. The third quarter seasonally is strong, so the company has reported double-digit revenue growth out there. But it's a sputtering recovery in growth because, while it has grown at around 10.6%, remember in the prior quarters, earlier it has been growing in mid-teens and a little above that as well, 30s and 25%, etc. So to that extent, it is, a lot softer than what was earlier done. But the good part is there is recovery. 10% revenue growth, 13% EBITDA growth. The net profit is impacted by a one-time tax charge of 25 crore rather. E-commerce showed a 37% growth, and liquidation for filler inventory has been completed in the third quarter. So from here on, we can expect some recovery. See mild green on Metro Brands. And on Hatsun Agro, the second quarter that the company has actually reported softer growth, 6.5% revenue growth. Gross margins have compressed to a multi-quarter low, and as a result of which the EBITDA margins also came off by about 60 basis points. The net profit on account of higher depreciation declined from the same time a year ago. See red on Hatsun and green on Metro Brands.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Upasana. She's here to tell us about Havells India's numbers. Morning, Upasana.
Good morning. Well, the weakness continues in Q3 as well as seen in Q2. Now, numbers were below our poll estimates on all three parameters, be it revenue, be it EBITDA margins or PAT. Now, company has registered a lower revenue growth of nearly about 11%, which was mainly dragged by the key segment, that is company's cable and wire segment, which forms nearly 33% of the mix. Now, cable and wire growth remained muted at 7% on a one-year basis. This was mainly due to wire destocking led by copper prices softening, but margins in this expanded by nearly about 70 basis points. Now coming to EBITDA stood at 426 crores with a downtick of 1.4% on a one-year basis, and margins were also under pressure, down nearly about 110 basis points, stood at 8.7%, while we were working with a poll of nearly about 9.9%, which was much lower. Now share of high margin wires and cable segment declined sequentially, while ECD and Lloyd share in the revenue mix increased, thus putting up pressure on the margins as well. Now, PAT stood at 278 crores with a downtick of nearly about 3%, which was below our poll estimates. Now, when it comes to Lloyd, it has reported a steady performance. The revenue growth stood at double digits, and even the PBIT losses have contracted. So, all in all, we are seeing a weak set of numbers from Havells.
Oh, yes, weak, absolutely. Upasana, thanks for rounding that up. In fact, we'll be chatting with the management, with Mr. Anil Rai Gupta, to figure out if this is just transitory, if it's getting better in Q4, and what's the outlook. That is Havells coming up closer to 10:15. Now let's get back to AB Fashion, which is also in our list this morning. Vinny, morning. Why are you watching out for it?
Good morning, Surbi. Aditya Birla Fashions is in focus today. Just do not forget that just this week that they had said that they are going to have a preferential issue plus a QIP, and they will be raising around 5,000 crores in total. Now, obviously, the QIP has been launched today. What we're seeing is that the base issue size is going to be around 1,500 crores, while the option to size it up is going to be further to 1,950 crores. Now, this is according to sources, is what we're picking up. The indicative issue price is at around 271.30 rupees per share, which is a discount when you look at it to yesterday's closing price of around a 2% discount to yesterday's closing price, so not much of a discount there. But do not forget, they've said that they will be using these proceeds to repay the debt that is there on their books, strengthen their balance sheet, as well as in terms of grow the business further. So general corporate purpose is also what the use of the proceeds are going to be. But a positive is what I'm expecting for Aditya Birla Fashions, given that, you know, they're actually walking the talk in terms of using the proceeds in the right direction, as well as raising the money at the right time.
All right, thank you very much for that. Well, TVS Motor and AI engineering in focus. Vamakshi is here with that one. Vamakshi, morning.
Good morning, Prashant. Let me first start off with TVS Motors, going with the green for this counter because the company has announced its entry in Morocco in collaboration with its distribution partner, Hindi Motors. The company is launching a wide variety of two-wheelers, which includes TVS N-Torque 125, Raider 125, Apache 160 and 200 in Morocco. So therefore, bodes well for the company. The next counter that I'm watching out for is AIA Engineering. Its arm Vega Industries in the Middle East, which is a wholly owned subsidiary, has decided to establish facilities in China and Ghana. They will be manufacturing high chrome grinding media using distinct technology, and this in turn will help the company mitigate logistics and supply chain constraints, which will lead to better market access for the company, better product availability, as well as reduced costs for some of its customers. They're also evaluating Indonesia and other geographic locations for setting up of similar manufacturing facilities. There's also another news flow, and that is that the company has completed setting up of a rubber and composite liners plant in Ahmedabad, and the commercial production has started from this. So again, going with the green for AIA Engineering.
Okay, all right. Thanks a lot for that, Vamakshi. Let's do a quick recap of all the top stocks we just stated out for you. The ones with positive news flow: Reliance Industries, LTIMindtree, Metro Brands, Aditya Birla Fashion, TVS Motor, and AIA Engineering. So a larger number of stocks to start off in the green, while we'll have a few stocks that could see some pressure: Axis Bank, Infosys, Hatsun Agro, as well as Havells India. That's about the equity market, but Manisha Gupta joins us, as always, to tell us about the commodity markets overnight. Morning, Manisha.
Morning, Nigel. Thank you for that. I'll start with the crude oil prices, which is trading off its 5-month highs, but even with that, it's headed for a fourth weekly gain. Well, the U.S. president-elect could soften the sanctions on Russia is the theme that the markets are working with right now. In any case, the declining U.S. stockpiles, winter heating, fuel demand, all of that has been supportive for the crude prices in the recent days. We have seen 12% of gains for crude in this year until now. But I want to quickly talk about metals also, because it seems like a stronger week for this asset class as well. If you look at the gold prices, they're trading at a 2-month highs. Aluminum is trading at a 4-month highs. Copper at a 2-month high, silver at 1-month highs. Even the steel rebar prices have rebounded from a 3-month lows. So a second straight week in this year where we are looking at the metal prices trading in positive as well.
Okay, all right. Got that, Manisha. Thank you very much for a roundup of all the commodity market action. We will take a very quick break on that note. Come back on the other side. We will connect with Prabal Sen of ICICI Securities and Gaurav Malhotra of Axis Capital to decode the Q3 fine print on Reliance Industries.